What if I told you a simple $2 hairdryer could be linked to a multi-billion-dollar shockwave in the AI market? Sounds unreal, right? But behind the scenes, a story has unfolded that wiped out billions in value from one of the hottest AI stocks almost overnight. And once you see how it all connects, you'll understand why the market reacted the way it did. Let's break it down. This content is for educational purposes only and should not be considered financial advice. March 20th, 2026. The market opens, and instead of a normal trading day, chaos hits. SMCI doesn't just dip, it collapses. The stock plunges around 33% in a single session, hitting a fresh 52-week low near $20.53. No earnings miss, no product failure. Instead, a federal indictment drops, and suddenly everything changes. At the center of it all is SMCI's co-founder, Yih-shyan Wally Liaw, who prosecutors allege was involved in a massive $2.5 billion operation tied to restricted AI server shipments. The allegation? High-end servers powered by advanced chips were being routed into China through complex channels, raising serious regulatory concerns. But here's where it gets even more intense. Trading volume that day surged nearly 6x normal levels. Over 239 million shares exchanged hands as investors rushed for the exits. This is what markets call capitulation, a moment driven more by panic than precision. Technically, indicators like RSI dropped into oversold territory. Normally, that suggests a possible bounce. But when legal and national security concerns enter the picture, traditional signals don't always tell the full story. So how did this situation allegedly unfold? According to prosecutors, the operation involved routing hardware through multiple shell companies across Southeast Asia, creating layers of documentation designed to obscure the final destination. And one of the most surprising details, dummy servers were allegedly built just for inspections. Empty shells meant to pass compliance checks. Then comes the detail that caught everyone's attention. Using basic tools like hairdryers to remove and swap serial number labels, a simple household item, playing a role in a highly sophisticated operation. Now, before jumping to conclusions, there's a critical distinction you need to understand. SMCI as a company has not been charged. The indictment focuses on individuals, not the corporation itself. Legally, that's a major difference. At this stage, the company is being treated as separate from the alleged actions of certain insiders. And that's exactly why the business is still operating. SMCI moved quickly. Wally Liaw stepped down. Internal changes followed, including suspensions and severed ties with associated parties. The message was clear: contain the issue, stabilize operations, and reassure the market. But here's the bigger question. Does that rebuild trust? History suggests that regaining institutional confidence takes more than internal reshuffling. That's why the appointment of Deanna Luna as acting chief compliance officer is significant. With experience from a highly regulated environment, her role signals an effort to strengthen internal controls moving forward. At the same time, there's another layer to this story that's harder to ignore. In the months leading up to this event, several large institutional players were already reducing their positions. On top of that, company leadership made relatively small but notable stock-related moves. On their own, these actions don't confirm anything. But in hindsight, they raise important questions about timing and awareness. Now we're left with a major contradiction. On one side, SMCI's business fundamentals were strong, triple-digit revenue growth, driven by rising AI demand. On the other side, concerns around governance are now weighing heavily on that growth. And in the middle of all this, one external factor could influence everything. Nvidia. As a key supplier in the AI ecosystem, Nvidia's relationship with SMCI carries significant weight. If that partnership remains intact, confidence could gradually return. But if uncertainty grows, the impact could extend far beyond just one company. Right now, no clear public stance has fully settled that question, and the market is watching closely. The next major checkpoint, May 5th, 2026. That earnings call is expected to be critical, not just for financial results, but for clarity. Investors will be looking for signs of stability, transparency, and whether customer demand remains intact. There's also another risk flying under the radar. SMCI could face review for its position in the S&P 500 during the next rebalancing cycle. If that happens and changes are made, index funds would be forced to adjust holdings automatically, creating additional pressure regardless of fundamentals. So, where does that leave things? Analyst expectations are spread widely. Some see downside if challenges escalate, while others point to recovery potential if the situation stabilizes. The range itself tells the story. Uncertainty is high, and outcomes remain open. And that brings us to the key takeaway. Right now, this is not just a financial story, it's a trust story. It's about governance, transparency, and how quickly a company can respond under pressure. SMCI isn't out of the game, but it's navigating one of the most challenging moments in its history. So here's the real question for you. If key partnerships stay intact and confidence slowly returns, does this situation become a recovery story? Or has the damage already shifted the long-term narrative? So, if you found this video valuable and want to stay ahead in crypto, market trends, and smart investing strategies, make sure to subscribe to MSTR Hub. Don't forget to like this video, share it with others, and drop your thoughts in the comments. Is this a real opportunity or just another risk? And most importantly, hit the bell icon so you never miss an update. Thanks for watching, and remember, smart moves build strong portfolios. MSTR Hub, where market insight meets strategy.